Well, hello there, traders and investors. I'm LA Little, and this is your daily NeoTA Wrap. Take a look at these markets from a neoclassical perspective. That means we're looking at supply and demand on the charts, folks. Each and every day, we ask ourselves, what happened today? What does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursdays, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube, and it's under the channel LA Little. If you haven't subscribed to the show, you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. As far as what's happening in these markets last night, we made the call. We said that we're probably going to get a down day today. That was after we got a nice bump up the day before, and in fact, that is what we see here on our screens tonight. And that call wasn't all that hard to make, and that was because we were looking at Europe. We were thinking Europe was going to trade lower. We'll look at those charts. In fact, they did. Switzerland is totally falling out of bed. I don't know if that's an omen or if that's something specific to that market, but it's having a hard time. If we look elsewhere, we got the Dow, S&P, all of them trading down today, pretty much across the board. Small caps taking the brunt of it. Had you oil reversal, and you had gold and silver money flowing back to those. Dollar was up big, gave it all back up. Dollar did a reversal. That's probably going to help to some degree the U.S. But it's really, the dollar's not going to kill this market yet unless it just skyrockets. The dollar's just going to be a thorn in the side. The dollar being strong makes the euro weak, which actually helps Europe, and vice versa. If the dollar pulls back and the euro pushes up, that tends to hurt Europe. And so, it's kind of a two-edged sword, and I'm not sure it's actually going to help in the short term. Let's look at the charts here, S&P 500. So we come down, we got over, and we've been identifying this bar right off of this quadruple witching that took place back there. We got over it yesterday, and we were back in the higher quadrant, right, back up here. Well, today we're right back down. And the way this looks with volume expanding as it did is we're probably going to try and trade lower. And if I look at a few other things, that's also the suggestion there as well. And we'll take a look at those as we go along. Matter of fact, let's look at one of them as we're here, and that's the technology sector. Technology has been driving this market higher. Got Apple after the bell. Apple earnings, decline, third sequential decline, quarterly sequential decline in earnings. Haven't had that for quite a while, probably about 4 or 5 years at least. And Apple is going to be a drag on this market come tomorrow. Now, again, just like the dollar, Apple's not going to kill the market unless it really plummets. And off of what I saw after hours and from the report, it doesn't look to me like it's going to plummet. But the problem here, if you look at the chart I'm showing you, the XLK, volume on the test here, lighter, you go up, you test, you fell on price, on volume, says you're going to pull back. That was the same thing we were looking at last night when we were saying that the European markets was probably going to lead to a pullback here. So technology has been the leader on the way up. Technology is not going to be the leader tomorrow from the way I see it. As far as elsewhere, here's another indication of that. If we look at the NASDAQ itself, the broad NASDAQ, you have basically a takeaway bar, almost a bearish engulfing. It just simply didn't get high enough to make it an engulfing, but did finish lower back into the gap. Again, this is not the end of the world, but it's not what you wanted to see if you were bullish. If you look at the NDX, which has been the strongest now, the NDX volume slightly heavier as it gets over back under. So that one doesn't really give us a clean tell. And then finally, if we go look at the small caps, this is where the pain is really being felt. The small caps can't lift. And we used to have the small caps giving us the best signals, and they gave us that best signal for about a year and a half, about a year ago. I'm wondering if this is starting to tell us the same thing. So you poke up here. Again, if you use this same bar, you go and draw it across just like we've been doing on the S&P 500. You test, you fail, right? You get up close to it, you sell. What happens on that test failure yesterday? You give it all up, volume expands. This thing wants to go test these lows. And so the Russell is not a pretty picture, in my opinion. And whether it's the harbinger of worse things to come, or whether it's simply just like we were asking about the Swiss market, is it just the outcast market at this time? I don't know. But again, it's diversion, right? You're getting divergence between these indexes, and you like to see them all trade together, not separately. Looking at the DAX, now last night we made the call based on the DAX, and that was a test failure. You had a swing point high here, swing point high there. You went into them, less volume. You closed lower. Tonight, or actually today, they go over it. They actually have more volume today, but you still have less volume here than you do over on this bar, which is the one you're testing. You go over it again. You close up underneath it one more time. It still wants to try and pull back. And then if we look at the other markets, like the CAC itself did the failure, did the pullback. The only thing I was noticing here when I was glancing at it before the show is that this one came back into swing point high and bounced off of it today. Didn't have as much volume as that bar. We'll see tomorrow if it gets into it. Odds are it will. And the reason for it is when you come back within 6 bars of a breakout, you typically get a retest that takes you deeper. And deeper on these is quite a ways down. So it looks to me like Europe's going to try and sell down. Maybe the euro is going to spike back up, dollar pull back, and that's going to put some pressure on those markets. Speaking of Switzerland, let's take a quick look at it. Using the SMI, you can see this market just continues to sell off, can't catch a break. And Switzerland at this point looks to me like it's given up the ghost. And so what I mean by that, of course, is that you had a lot of goodness taking place on the way up. Nice big spike up here. Some volume on the way back, right? You get up there, you test. You get over it. You make a new swing point high, but you can't close over this one. Actually, you did, I think. Maybe not on this one. And then the low of that high is down here. You can't hold. Starting to give it up. And now you're back into this big bar, and that's the high volume low. If you get more than about a third of the way in, you can write this baby off about 78 and a quarter, it looks like. Finally, if we wanted to look at something that is working, you just have to go to the BRICS. BRIC. These guys are at the top. Put them on a weekly, they're at the top. Put them on a monthly. They're pushing up pretty nicely against the swing point lows. I suspect they're about done, but they have had one nice run to the upside after being clobbered to the downside. But that is where some of the money has been working of late, the last few months. Finally, let's look at those currencies, because I think the currencies are going to be the tell the next move here, or what's going to move things. If we go over and look at the euro, for example, we're going to see that the euro reversed today, less volume, back over 2 days now after an extended move to the downside. It's going to flip around, try to bounce. If this does hold on the weekly, you're actually going to get the bounce on the weekly off this test, and that can lead to a larger bounce, and that bounce should take it back up into this bearish retest regen. If it does that and it comes back within 6 bars, you can expect it to trade just probably up into this area at least. And so this euro looks like it's going to get a pretty decent bounce. And again, that may be the pressure that pressures the equity markets over in Europe. Finally, if you look at the dollar, now the dollar actually traded higher today, had a little bit more volume on the daily. And that all looks good and well. Now, flip it over to the weekly, though, potentially you got a over-under starting to take place here, and it's also potentially a test failure at the highs. So you got this high up here, you test into it, right? You're making a nice big run up. Looks like the volume's going to be lower on the weekly, right, or potentially lower. Actually, let's take a number. This is 8, and this was 2, and we're Tuesday, right? So it's going to be lower unless we get a volume expansion the last 3 days. And so that would be a test failure at the highs. Maybe, maybe not with respect to volume, but it definitely will probably be an over-under unless volume picks up. So looks to me like those currencies are going to flip for a little while here. That's going to put the euro back up. That's going to put some pressure on the European markets. That's also going to end up with a little pressure on our markets as a result. And we still have that little thing called the election hanging out there in less than 2 weeks. So a lot of stuff still happening. You got earnings galore the rest of this week. Apple's not going to help this market. Doesn't look like it's going to kill it, but it's not going to help it. That means technology probably isn't going to drive it. Who's going to step up? So far, nobody has. That's it for tonight. Have a great one. I'll see you tomorrow.